Alrighty. Apologize there for the black screen. I had to log out of my broker for the weekend. Let me know if you guys can hear me in the chat. Test, test. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let me know if you guys can hear me. There is a lot to talk about. And we've been saying this since December of 2024 that traders must be ready to adapt in real time to the new market regime. It was not going to be the same bull market we experienced from 2022, and 2023 is really where it got kickstarted until the end of 2025. We would have to deal with a new and ever-changing market environment purely created from the new regime. And these are external contexts, right? So we split the market up into two sections. We have internal context and we have external context. These are significant external context that cannot be ignored. So here's the schedule for today. We're going to do a deep dive into what happened today. The markets did a full trend day down, -3%. And we're going to jump into the Discord and we're going to showcase everything that happened. For me, unfortunately, I got hit a little hard today. A little bit of a tilting day for me personally because I had a hedge short at 68.0475. That was my hedge short. And unfortunately, I got poked out today at 9:45-ish a.m. It is what it is. It's all good. You're not going to catch every single move. And guess what? This move is a pure manipulation, external context move. So it's all good. It is what it is. It's all good. Let me just quickly post that I'm live on X. And we'll get started. Quickly post on X here. Give me 2 seconds. Afternoon. Nice to see you. Good afternoon. Today's going to be an extremely important educational recap. All right. So let's go ahead and jump into the chart now, and let's go ahead and discuss what happened today. But first of all, this weekend is a very important weekend for me. I'm going to be extremely busy. We're doing a complete remodeling of the SPY VIP. We're doing basically housekeeping, and we're renovating the SPY VIP, and we're making the Substack, the notes that I do for the SPY chart, the futures chart, we're making that the home for the Substack. We're making those notes. Substack is going to be the home for those notes, and it's going to be completely free for everybody. But the execution in real time is going to be specifically in the Discord. So let me go ahead and bring over the Discord, and let's just talk about the day trading parameters. And let's just talk about day trading for today. All right. So let's just zoom out here. Here's my day trading chart. And at the time, the real range that we were only focused on was 67.41 versus the all-time high around 6,800 and 68.12. But obviously price action today ended up completely flushing off the rails because we had external context in play. And you don't really need to overthink the external context today. It's literally just the president doing what he's been doing all year. Right? This has been happening all year. And this is new market context that you need to adapt to. And if you can't adapt to it, you're going to get hurt pretty bad. For me, I got hurt, but I didn't get hurt that bad at all. Let's quickly go into the Discord and showcase what happened. So I'm going to talk about the day trading channel first. In the day trading channel, we discussed that these notes are getting posted in a new format on the Substack, and all of the trade plan and notes are in here. So let's just quickly read the trade plan very quickly. Bullish. I want to buy dips today with the understanding that the chart is extremely choppy. This is obviously in the pre-market. This is before Trump started retracing the market on the macro time frame. The overnight range is back and forth, battling with sellers, defending below broken supports that were a must hold yesterday. If bulls want to trend above all-time high, vice versa, buyers defending yesterday's low with a higher low. Things can get tricky above or below the overnight high and low, in which we must understand the real-time situation. Is the market flushing on excess weakness? View the watch list. Is it trending on excess strength? View the watch list. Either way, the strongest support on the chart is 67.4150 through 67.54. This is from a pure intraday perspective, and I do not mind risking my points here, as the entire structure of this week's range will come collapsing down below. Let me reread that. The entire structure of this week's range will come collapsing down below 67.4150 and 67.54. Therefore, expecting demand in this zone, with 67.47.75 Tuesday's low / this week's low being a core false breakdown trap pivot. I'm not too fond of the false breakdown of yesterday's low, because price would be breaking down the overnight low, which is a warning sign, and from a pure points parameters perspective, sellers wouldn't be exhausted until 67.41 through 67.54. I will apply the entry models today at 67.4150 through 67.54, and the rest is noise. So let's look at how price action played out, right? How did the bots alert us? So at 10:59 a.m., the bot alerted us that 67.4725 is active long. Apply the entry models. And what I said after that is we had major news coming in, no false breakdown, just get onto the sideline. That was the best decision today if you were day trading. Swing trading and macro time frame levels, a little bit of a different story. But if you're day trading today, I firmly believe that's just hop onto the sideline, get onto the sideline. There's going to be some better opportunities next week. This is a major surprise. And anybody that's day trading with a tight stop loss is probably just going to get extremely burned. But either way, we'll still talk about how do you day trade when price action is doing what it did today, which is just flushing beyond the rails, right? But in general, I truly believe if you're a day trader, hopping onto the sideline makes the most sense after we get such a massive surprise, right? Look at the size of these two candlesticks. These two candlesticks right here, guys, on this 1 hour time frame is pretty much the entire size of the entire week's range. So people ask me all the time, how do you understand volatility? Volatility simply comes down to looking at the candlesticks. These two candlesticks is the same size, it's the same range as the entire week's worth of price action. And this is happening literally within a few minutes. So you know that volatility is at extremes, it's at extreme highs. Other than that, let's just quickly discuss for people that were interested today, how do you take advantage of the volatility? How do you take advantage of the flush? We already know that 67.4150 if it fails, then the entire structure is going to come collapsing down. That's what we wrote about in the trade plan. In the trade plan, we were focused on longs because predominantly this week has been overly bullish, right? Until proven otherwise. And then price action does prove otherwise because at 11 a.m. it breaks down 67.4150. Now, this is not a trade that you have to 110% take, but it is a trade that's worth noting for educational purposes, because in the trade plan, we talked about this zone very thoroughly, and we've been talking about this zone all week, right? So when you see that these two candlesticks here on the 5-minute time frame, within 10 minutes, two candlesticks is larger than the entire week's worth of price action, then you're telling yourself that volatility is at extremes. You're telling yourself that if you wanted to long this reaction right here and you wanted to long the false breakdown of this week's low, which is right here, you have to be absurdly careful, right? Because there's something else that's happening here on the chart that's outside of any technicals, right? It's pure external context. But when you notice that volatility is high, you notice that 67.4150 has failed, right, off of the flush at 11 a.m., then every broken support, technical analysis 101 still, right? So not all the technical analysis gets thrown out the window. Technical analysis 101 is that supports failing creates resistance. 67.41.50 failed. 11:05 a.m. resistance. 11:10 a.m. resistance. 11:15 a.m. resistance. So if you're somebody that wanted to trade shorts, if you wanted to hop into the 10 out of 10 volatility that we got today, then the only short that makes sense to me, if you weren't hedged at all-time high like I was earlier in the week, is shorting 67.41.50, and then your stop loss can go behind the zone. I'm not sure where VWAP was at the time, but your stop loss behind VWAP makes sense as well. Even if you wanted to extend your stop loss, a wide 20-point stop loss, and you're simply betting that buyers are going to get completely flushed out of the water because of volatility being 10 out of 10, because the bottom of the macro bull box has failed, this is a trade that you can obviously be aware of, right? It's a real-time read. This is not a trade that you have to 110% take, because it will be difficult to take in real time if you're not an experienced trader, but it's still a great trade nonetheless, right? And obviously, hindsight, this trade went for 7-8R, which is absolutely nuts if you didn't scale out. Really, really nuts. Anyways, I want to primarily focus on the fact, though, that I said there's no false breakdown here at 67.47.25, and that's what we planned for in the pre-market, 67.41.50 through 67.54. Failure of these levels will change the bias of the chart, highest probability for a reaction. We did indeed get a reaction at 11 a.m. Right before 11 a.m., 10:55 a.m., we did indeed get a high probability reaction, but did we get a false breakdown entry model to apply? No, we did not. Therefore, simply get onto the sideline, or if you want a real-time read, execution-wise, look to short broken support. And because we're good at analyzing the charts from an internal perspective, internal context here, you know that 67.41.50 is the most important support on the charts. It failing can give you a valid short idea. Once again, we talked about that thoroughly in the trade plan. If 67.41.50 through 67.54 were to fail, then the entire structure of this week's range will come collapsing down. And that's exactly what happened. So that's day trading for today. Let's talk about swing trading. And swing trading today was very, very, very unfortunate for me, because yesterday, I'll show you guys the position. Yesterday, I had this position active. 68.04, so 68.05 round up, was my average cost. I was short 2 MES contracts at 68.05. So let's just look at it from a pure hindsight perspective. I'm going to tell you guys how I fumbled today. I'm not just going to show you guys how I'm not going to learn from this trade. So 68.05 right there. My stop loss was 20 points. There's a hedge right there. So this trade would have went for easily plus 1,000%, right? 10R plus 1,000%. It's all good though. Why? Because I learned from this trade. Let's go back to the intraday time frame and let's look at it. And also let's just quickly go back to the notes as well. So for buyers today, they must defend the prior day's low 67.60.75, right? And for sellers today, they must defend below the overnight high 67.92 if they want to showcase strength for a breakdown attempt below the overnight low and yesterday's low. And we're expecting a reaction in 67.41, right? So as soon as 67.92 broke out, I got very hesitant on this short hedge and I simply trailed it. But that technical analysis for me today in the pre-market, it just was not the right TA for today, straight up. The overnight high today, that's not enough confirmation that buyers are completely in control, because bullish time frame alignment only takes place above the all-time high, right? And then the all-time high is also here as well. Bullish time frame alignment only takes place if buyers manage to break out the all-time high. So my stop loss, my original stop loss at 68.25 wasn't perfect. It was a perfect stop loss entry or stop loss placement. And I'm going to tell you why. This is not hindsight. The stop loss at 68.25 is a macro stop loss. That's what my hedge short means, but it's also a stop loss at a place of invalidation. I know that sellers are only truly blown out of the water if all-time high gets expanded upon, right? And because my stop loss got tightened below the all-time high, I believe it was a mistake on my part. So this is how you be honest with yourself, right? This is how you be honest with yourself. You do not go into your journal and simply say, oh, today is an anomaly. Oh, Donald Trump flushed the market. The trailing my stop loss to break even was fine. I think given the fact that it was a hedge, and my hedges are designed for situations like today, I should not have trailed my stop loss. But if it was a swing trade, maybe that's a different story. But this is also circling back to why your portfolio goals and why your personal situations matter so much, because they change the setups, they change your risk management, and they change what you're doing at these levels. I needed a hedge for my portfolio. I lost my hedge because I trailed it for whatever reason. It could have just been pure FOMO. Or should you not FOMO? It could have just been pure fear of taking the loser on the hedge, right? Whatever the reason was. But I ended up breaking my hedge rules, which is just keep it active, right? It's a hedge. A hedge is protecting my account. Derry, did you get wicked because you moved your stop loss at break even? Yes, so I'll draw up the position tool here so it's more clear. The average cost was 68.04.75. Stop loss 20 points, 68.25. So at the open today, when I saw that the overnight high broke out, I trailed my stop loss to break even. And you can see that this wick right here, wicked me out, and then the flush followed. But what I'm trying to explain here is that bullish time frame alignment and my hedge only gets invalidated if all-time high breaks out, not the overnight high. The all-time high zone is where bullish time frame alignment is going to get printed. That's where sellers gets completely blown out of the water, not the overnight high. So I literally just mismanaged this trade. But I think if you're swing trading, so yesterday, for example, if you shorted here at the opening range with the breakdown of 6,800, so let's just foreshadow that or foresee that. So yesterday, if you shorted 6,800 and your stop loss is right there behind the all-time high or right there above the all-time high, and then you're looking to swing trade this position, you definitely hit some nice targets. And then if you were to trail your stop loss to break even, I think it's completely fine in that situation. But for me, I wasn't swing trading. I was hedging. The hedge was my goal for this position, and I just fumbled the hedge, right? I fumbled the hedge. Got it? Yeah, that gets me in trouble too. Yeah, I definitely just fumbled the hedge. But it's all good. We move on. We learn from the mistakes, and we look to what's next, right? There will be more opportunity. So let's go to the macro time frame, and let's talk about the two zones today that were active. And we'll also go into a smaller time frame so you guys can see the entry models. So first of all, 6680 and 6693.25, that is our first high quality zone of interest. And we go into the trade plan for today. This is the swing trading channel. The trade plan is right here. 6680 through 6693.25, last Wednesday's overnight low. This is also the monthly low for October. It's about a minus 2% dip from all-time high, and it's also 61.8% retracement using the September 17th low through all-time high. So this was our very first area of interest to look to buy the dip, because overall the macro time frame at this point, when price action was over here, was still bullish. Right now, we're very, very neutral off of the failure of 6611. So let's zoom into a smaller time frame here and take a look. So if you're applying the entry models, first of all, if you applied a predetermined entry model, we'll discuss why the predetermined entry model didn't really make much sense for today. But if you did apply the predetermined entry model, your entry would have been 6693.25 and your stop loss 6673.25. For full transparency sake, that's what I did today at this zone. I had simply a blind buy order at 6693.25 with 6673.25 being my stop loss, right? And we'll go to a smaller time frame here. You can see a little bit better. So The predetermined entry model today, did it make sense? Did this predetermined entry model make sense? I think because the market is flushing below 67.4150 on extreme excessive weakness. Take a look at the watch list today. Minus 4% Apple, minus 5% Amazon, minus 5% Tesla, minus 5% Nvidia. Obviously, at the time, you can probably cut this in half, right? So at the time when price action got filled here, it was minus 2% Apple. You guys get the idea. But does a predetermined entry model make sense here when the market is flushing on excessive weakness? I don't think it does, but I wouldn't argue with you if you took the predetermined entry model at 66.9325 or even 66.80. I would not argue with you if you simply bought this level blindly. But I really do believe that the false breakdown entry model at 66.80 was the A plus setup to take. And unfortunately, the A plus setup at 66.80 failed because regardless if the setup is A plus or not, the external context is taking precedence, right? So how does the false breakdown entry model look here? Well, first of all, you have price action hovering below 66.80. You have it rejecting 66.80 at 11:35 a.m. And then you get this nice, beautiful 5-minute outside bar to recover above. We'll go back to the 15-minute time frame. So when you see that these wicks are developing, you can literally just mark it into the level. Your stop loss is behind the low of the day. And the significance behind your stop loss here is because if we want our stop loss to be at a significant point of invalidation, then sellers simply just need to make a new low of day. Volatility is very high today. It's at 10 out of 10 extremes. So the actual points of your stop loss is high, right? 20 points is fairly high for a false breakdown entry model, but it makes sense because volatility is extremely high. So when you see this wick, when you see the recovery, when you go down to a smaller time frame, you see the inside bar rejection, and then you get the recovery above with the 5-minute outside bar, you can mark it in here, stop loss behind the low, and it either works or it doesn't. 1R did get hit on this trade. 1R did get hit. So that's important for me to note. So if you managed your trade here aggressively, or I guess would be defensively, if you managed your trade here defensively, 1R would have been a decent spot to look to take some profit. 1R would have been a decent spot to look to scale out. For me personally, with my swing trading methodology, I don't ever settle for 1R to scale my position. This is obviously a macro level of interest as we talked about in the trade plan, such that I always extend my targets to at least 2 or 3R, right? Fortunately, that did not get hit. The Fibonacci trap also presented itself on this trade idea. Let me just highlight my fib better. The Fibonacci trap presented itself, and you can see all of these wicks right here, 11:55 a.m., 12:10. This is essentially just midday chop, but it's still giving you good criteria and good indication that potentially sellers are exhausted. And when sellers are exhausted and retail is chasing the breakdown, then we can see a mean squeeze, a mean reversal back up. Unfortunately for today was just an anomaly. Today, we could not see a reversal from the macro support, and we ended up making a new low of the day. So for me, I took minus 2R in this zone, and I just wrapped it up. I said, you know what? I cannot lose more than minus 2R. That's a part of my methodology. I'm retiring for the day, and I will be back on Monday. We'll reset for better opportunities. But I still won't argue with you guys. If you skip the predetermined entry model, if you took a minus 1R with the false breakdown or the Fibonacci trap, and then you tried again with the 60, let's see here, the 66.5725. If you tried again long at 66.5725, then I really do feel like the entry model did present itself again, but it's just one of those days. It's just one of those days where we're getting minus 3% in one session. So let's go back to the trade plan here. Below 66.80, we had 66.5725, and 66.5725 also aligned with the first morning low, right? The afternoon low right here that ended up trying to trap sellers. So in this situation, when you see price action hover below, we're rejecting it. 66.57.25 is the macro level, and then we recover above. I won't argue with you here if you took this long as well. This long makes sense. This is a decent long. This is a decent opportunity. In all honesty, it's an A to an A plus setup. It's an A to an A plus entry model on any other day but today. Today is just a sub 1% chance of happening. So 66.57.25, that's your false breakdown here. Buyers are trying their best to print a false breakdown. Your stop loss goes behind the low. It's the exact same setup, right? It's the exact same setup as over here. Nothing changes. Your stop loss is behind the low. If sellers are truly trapped, then sellers cannot make a new low of day. So your stop loss goes behind the low. That's a spot of invalidation. In this case, your 1R does not get hit, unfortunately. And then this is another loser. The next zone below, I don't really see anything here. And honestly, guys, at 3:40 p.m., you should not be trading on a day like today. 3:40 p.m. at the close, 3:40, 3:45, it's a lot of noise going into the close. So at the end of the day, I took minus 2R and I missed my hedge. But what's my emotion saying? What's my psychology saying? Am I going to give up? Am I going to smash my computer? I saw people smashing their computer today on X. That was nuts. Am I going to smash my computer? Absolutely not. I'm going to journal. I'm going to learn from my mistakes up here with my hedge position. And I'm definitely going to try to understand if the next Trump day is even worth my time. Is the next Trump day even worth my time and my money to look to execute on a day like today? Because a day like today, in all honesty, is just pure manipulation. And this happened back in February. If we go back to February, all the way back here, this happened. February 21st, I remember this day like it was yesterday. February 21st was a full trend day down, exactly like today, and it was created based on pure manipulation. So let's just look at, we'll actually go to a fresh chart here. Let me get rid of these levels. Will today results in the exact same thing that happened in February? That's really intriguing. So February is right here. Take a look at the structure. We broke down super significant bull box over here. You can see it clearly. Let me just draw a line. Super significant bull box was right there. We broke it down. We flushed, and the market crashed. So the last significant bull box is right here. Right? We flushed it. Will the market crash? That's the next, question that we're asking ourselves. At the end of the day, who knows? I don't know. You don't know. Even Trump doesn't know. We have no clue if this market is going to do the exact same thing it did in February. February into March, into April. Will the same thing happen October, November, into the end of the year? We will have to wait and find out. But anyways, guys, that's today's recap in a nutshell. Everything from the hedge that I fumbled to the 2 losers that I take to retiring at the end of the day, just get out of the way on a day like today. That's everything in a nutshell. But let's just talk again about the psychology of today. Because again, you have, why are you smashing your computer on X? It just doesn't make any sense. So many people were flabbergasted today. Flabbergasted. And it truly just comes down to understanding the market structures in play. That's going to help your psychology so much. Because I knew that 67.41.50 was failing, I knew that something crazy was going on a day like today, regardless of the fact that if you saw the Trump tweets or not. When 67.41.50 breaks down and when the 2 5-minute candlesticks are flushing it just like that, literally just like that, then you know something crazy is going on. But imagine if you didn't have these structures drawn on your chart, you're completely lost in the sauce. Completely lost in the sauce. We know that if 67.41.50 fails, then the entire structure of the week comes collapsing down. We wrote that in the trade plan. Taking a loser at the supports below, the macro supports, it is what it is. I have to take losers here. It is what it is. Because the last time I caught a long all the way down here off the macro support, look what happened, right? So the fact that I took a loser here and here, I'm completely fine. I didn't smash anything. I was sad, but there's always tomorrow. Yeah, that's why, guys, on days like today, don't go on social media. It's a clown fest on social media. Do not go on social media on a day like today. There's a lot of people that are pushing agendas. There's a lot of people that are trading paper and they're saying they caught the top. Well, guess what? They shorted here, 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 and finally they caught it after 15 tries, and now they're posting it on their account. So, in general, guys, just make sure you stay true to yourself, journal, and don't spend time on social media. I really do feel like these after hours recaps, these after hour team meetings, I really want to try my best to showcase what true development looks like to become a professional trader, because I'm a no BS person, right? I have mentors that have been there and done that. I have mentors that have been in my shoes and they made it, right? So I'm not pulling anything out of you know what. I'm simply learning from my mentors, their past mistakes, and I'm trying to become like them as well, right? I have literally nothing being pulled out of my you know what. So that being said, guys, if you have any more questions, comments, concerns, you can let me know. Today, in a nutshell, really comes down to understanding the market structures and how they dictate who's trapped and who's in control. 67.41.50 failing was the very first sign that buyers would have to start to puke their positions. Intraday traders would be completely trapped, and we would have to just look to the macro supports. If the macro supports held, they held. If they didn't, they didn't. All good. At the end of the day, you're just risking 1R to make potentially 5, 6, 7, 8R if you're a swing trader, right? If you're a day trader, maybe it's a little bit of a different story. But I talked about in the Discord today in the day trading channel, I think it made a lot of sense to just hop onto the sideline. Yesterday, we had a phenomenal trade. Yesterday, we had at least a 3R trade yesterday. And I also wrote about in the trade plan from this morning, when you have winners throughout the week, on a Friday specifically, it's one of the worst times to trade because you can get very emotional into the weekend and you can give back all of your winners from the week. So in general, today is a beautiful day to hop into your journal. If you had a good day today, absolutely phenomenal stuff. If you shorted the resistance up here, or you shorted 67.41.50 off of the retest, off of the back test, at 11:15 a.m., I think you did absolutely stellar. Absolutely stellar. If you took losers today at the macro supports, absolutely nothing wrong with that. I don't see anything wrong today unless you were just clicking sell because you saw tweets. I think maybe there's something wrong with your methodology there. But anyways, guys, if you have any more questions, comments, concerns, let me know. I will have to do a lot of work on the weekend because all of these levels need to be updated. If anything, I should just delete everything right now and make it fresh, right? Because I have levels. This is my day trading chart. I have levels going all the way down to 6,500. 6,500 is not that far away anymore, especially if the downtrend wants to continue. So I will probably keep my levels from 6,500 into today's low of day, and I will get rid of everything else. So these levels, all of these levels are going to be completely excluded, and we're going to start fresh. Let's see. Yes. No. All right. Thinking the same thing. Yes, we have to start fresh on the weekend because today's price action definitely did shake up the structures. And today, in general, this week, it will give us some more levels. And yeah, I'm just looking at this freshly right now. We have today's low of day, very important. We also have the 1:10 p.m. low, We also have the 11:40 low, and obviously 67.41.50 is going to be the most significant level on the chart. I think it will remain the most significant level. So just to recap everything that we talked about the Discord. We talked about for my day traders today, my beautiful SPY VIPs, it made a lot of sense to just hop onto the sideline. For my swing traders today, I ended up losing 2R on the swing trades. It's all good. It is what it is. Maybe I rushed a little bit, but I definitely don't feel upset that I took those trades. And my hedge position, we talked about that thoroughly. Don't really want to talk about it anymore. We'll move on. We'll go next. And the hedge position really just comes down to understanding your portfolio goals and how that impacts the trades that you take. The hedge situation comes down to understanding what you need for that portfolio. Do you have a video of how you plot your chart, like when you refresh the levels? So the way I get the levels, we can actually just talk about it right now. So let's go to a fresh chart. Let's go to a 1 hour time frame. On the weekend, my chart is going to look like this. And we're going to have to adjust. We're going to have to adapt. So first of all, we have to think about boxes. That's how I like to think about, right? Because the chart consolidates and then it expands. It consolidates and it expands. Those consolidation boxes can be used as extremely significant support and resistances. So first of all, let's go ahead and draw the all-time high. That's number one, right? All-time high, we'll go high to low, right? Top to bottom. All-time high is right there, all-time high. And let's continue looking at the structure. I can already see right off the bat that this is my first zone. We have the Tuesday 7th high that also aligns with the 3rd high. And we also have today's high as well. So taking a look at this structure, it's absolutely phenomenal. This is the all-time high resistance, like so. Very clean, very simple. Let's continue onwards. We're going top to bottom. And we'll have to look at where somebody got wrecked, right? That's why I like to draw my levels as well. Where did a lot of liquidity get flushed? Where did a lot of people get trapped? A lot of people got trapped today off of the breakdown of the overnight low. A lot of people also got trapped off of the breakdown of the October 9th prior day's low. That becomes another zone. So you can see how this is very easy for me because I've just been studying the chart for so long. But for somebody else that doesn't have a trained eye, right, definitely spend a lot of time trying to figure out what I just said, right? Where did a lot of people get trapped? That's the number one premise for all the levels that I have on the chart. Where did somebody get trapped, right? Price action loves to return to where somebody got trapped because there's a lot of demand or there's a lot of supply in that area. And it's likely to continue to trap more people at the exact same spot where it trapped them to begin with. So today's low makes sense. We also have this 9 a.m. high, intraday high from October 2nd. This is probably a weekly high, right? And this zone or this level at 67.8225, it acted as a very decent mid pivot. I'm not too sure as of right now if I will keep this level, but this is a good example of what your range high structure would look like. And we just continue lower, right? Top to bottom, top to bottom. We have the Tuesday weekly low. This is a massive level. This is where sellers took control, and this is where buyers really got trapped today for the massive flash crash that we had. So this also becomes a significant structure, right? And then obviously 67.4150, that was the level in the spotlight today that took precedence. So I have 1, 2, 3 zones here, and I created in like 10 minutes. And these zones are extremely significant structures that will dictate who's trapped and who's in control. So for example, if we go from 66.03, the current price, 66.03, and we just completely short squeeze all the sellers in today's range, and we recover above 67.4150, then that to me is confirmation that the dip has been bought. We're back at the top of the range and sellers have been flushed out the water. However, 67.4150 is also a fantastic area of resistance now. Just like how it was resistance at 11 a.m. today, it's going to remain significant resistance until proven otherwise. So anybody that's going to be shorting this level next week, if we do get there next week, absolutely no argument there. Absolutely no arguments. That would be a fantastic area for a short. 67.4150. Some additional notes for you guys. For long positions, I like to use the false breakdown entry models. For short positions, I like to use the predetermined entry models. So for shorts, I think waiting for false breakouts to short can be a little bit tricky because sellers, they take the elevator trip down the range and sellers are just naturally more violent than buyers. So majority of the time, you're not going to get that false breakout to enter. That's why I like to use the predetermined entry model for anybody that's shorting this level next week right here. Just buy on first test. That makes the most sense, right? Just buy on first test. Either it works or it doesn't. Just for educational purposes, let's look at a stop loss here. Where is it? Position tool, position tool. Why am I not finding my position tool? It is right here. Okay. Where's my position tool? There it is. So if we're shorting 67.4150, take a look at the structure, right? In order for buyers to take control, they have to hold above. They have to hold above the level. Even if there's a false breakout of 67.4150, then we also have the October 9th daily low right here. If you want to have a wide stop loss here, so for example, if you want to use this position here as a hedge, if you are somebody that's saying to yourself that the downtrend is going to continue like so, and you want to protect your position, then a wide, 20-point stop loss behind the October 9th low makes sense. Or you can simply put it behind the lows that we have from 67.47, right? And that's going to be a tighter stop loss here if you want to day trade and you just want to look for a reaction on first test, you hit your 1R, etc., 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 right? So this is a phenomenal example. Thank you for asking that question, sir, in the chats. How you develop levels, how you develop the structures, and how do you take advantage of those structures. I got absolutely wrecked today. Today is just one of those days, my friends. Today is just one of those days, right? It's just one of those days. It happens maybe 2 to 5 times a year because of the new market regime. We can expect this to happen 2 to 5 times a year until 2029, 2030. So we have to be able to adapt, we have to be able to adapt and just prepare ourselves for what can happen next. So anyways, guys, that's a quick educational lesson on how to draw the market structures. How do you draw a trade plan with the market structures? And just keep going down, right? So you start from top to bottom, and we'll keep zooming out here. You can even zoom into the 15-minute time frame, and you can look for more intricate levels, right? You can look at these wicks, a little bit more intricate levels, but I like the 1 hour time frame. And we'll just keep going down and down and down. So we'll go into a 5-minute here, and we can take a look at today's range, because today's range is one of the most important ranges in a very long time. So we have this level right here from the afternoon, 11 a.m. This was an obvious breakdown trigger at 11 a.m. And if you look to the left, 67.15 is also a significant area from the end of September. So this is going to be a significant area of interest, and you just keep going down, you keep going down, you keep going down. Obviously, you don't want to overcomplicate it. You don't want to be doing this where you just mark every wick, every level like this. You don't want to be doing this, right? Every single thing is not that important. That's where the the internal context really, really, really comes into play. This is where we flow with price action like water in a river, because we know that today's daily low, the 9th, is extremely important to the overall context of who got trapped today. If buyers simply held this higher low, or we printed a false breakdown of the October 9th daily low, then the sell would not take place. It's the exact same idea with the weekly low and the October 2nd low, right? It's the exact same idea. Alrighty, I'm excited for the homework report on the weekend. Once again, all of my notes is going to be completely free. So you guys don't even need to draw the structures. I can draw it for you. It's going to be completely free on Substack for everybody. As you guys know, SPY and futures is my niche. And as you guys know, my older brother Rich sells premiums. I lost my premium chart. Let me see if I can get it back. Get rid of all of these. Right. And we got so close to getting a sign today. It's actually insane. 65.50, 65.20, and 64.70. If you guys were in the pre-market live stream, we talked about how we had a 99% chance to cash out these premiums, and even Trump couldn't get us assigned at these premiums, which is kind of funny. It's kind of ironic. So 65.50, 65.20, 64.70, these are all the October 10th expiry, and they got cashed out today. But the broker will not cash us out until later today, I believe is what Rich said. So we'll make an update on the weekend with the premium harvested. The October 17th expiries, that gets a little tricky. I do believe Rich had a position somewhere up here, and he's going to essentially alert you guys what's happening with those October 17th puts that were sold. Don't say it out loud. Well, I don't think he's listening to me, so it's all good. I don't think he's listening to me. Maybe he is. You never know. Maybe he is. No, I'm joking. But anyways, that's today's session in a nutshell. A lot to journal, a lot to talk about, and there's a ton of education in today's session. But I want to reiterate the consensus from a psychological perspective, right? We're in this game to not only make money, but we're in this game to do something called constant refinement. Constant refinement. And if professional trading is similar to professional sports, the best athletes in the world, they've mastered constant refinement. Doesn't matter how good they are. Kobe Bryant was still getting up at 5 a.m. and shooting his shots. Still practicing. Doesn't matter how elite they were and how good they were at what they did. They were still practicing. They were still going into review. They were still talking with their coaches and their mentors. They did not have an ego over the sport that they played. They simply surrendered their ego to the sport that they played. And I genuinely believe it's the exact same thing with trading. If the chart is our field, if the chart is our basketball court, we have to surrender ourselves to this court. We have to put our ego in the trash can, and we have to play the game to the absolute best of our ability. No matter how good we think we are, we can always be better. And no matter how good you think you are, there's always somebody that you can learn from, whether it's on social media, which is a very bad place to look, or in these books that we read. There's always something to learn. And the most beautiful thing about trading is that it's going to take you pretty much your entire life to completely master every single sector of the stock market. You can master a specific niche within a few years. Sure, you can master ES, like how I can understand the chart very thoroughly and clearly. You can master ES within a few years. No problem. But can you master options, premium selling? Can you master crypto? Can you master buying dips on stocks? Do you even have enough cash to do so, right? Personal situations makes a lot of an impact on these trades, right? So obviously take it one step at a time, master one thing at a time, and take it step by step. Put a lid on the trash can bin. Exactly. So if anybody in the chat wants me to run through something specific for today again, if you guys want me to run through why the bull box was so important this week, I can talk about it. If you guys want me to talk again on the short hedge that I fumbled, I can talk about it. If you guys want me to talk about the two losers for the swing trades, I can talk about it. Or if you guys want me to talk about how I manage the day trading channel, we can ask questions in the chat if you want to. If not, we're going to go ahead and jump into the book. And unfortunately, actually, it doesn't look like I can read the book because I do have a session with a member at 5 p.m. So let's just hang out for another 12 minutes and we'll finish the book next week. Because I do want to dedicate some time to the book Best Loser Wins by Tom Hugard, and I want to finish it and give it as much respect as it deserves. So if you guys have any questions, how did you guys perform today? I know today was a very tough day, but at the end of the day, it's days like today that really make you a gem. It's days like today that shouldn't blow up your account. It shouldn't make or break your accounts. And it's days like today that we can really learn a lot, right? Because regardless of the tweet, regardless of the external context, if you go to my structures, price action was still respecting the significant structures that we talked about in the trade plans, right? So 67.47.25 was our first area of interest. You can see that price action wicked off of it and then it failed. And then we had 68.80 or 66.80, excuse me. That was the next high quality zone of interest. You can see how price action chopped it out here until it eventually failed. And then we had 66.54. That was our next zone of interest. We chopped it out and then we failed. And we even had the FOMC low, 66.11, which is right here. 66.11 ended up reacting as well. So every single structure here ended up doing a good job. It's just one of those sessions. Like, we're continuing to flush at 4:50 p.m. heading into the weekend. We're continuing to flush. It's just one of those days where the external context is too much for the technical analysis, and we end up printing a very rare trend day down, right? Yeah, that's nuts. The market is still going down. But I have this little note right here, correction below 66.11. And honestly, it does look like we're starting to correct the markets. Correction below 66.11. Man, it really stings. It really stings my soul that I couldn't get that hedge, man, because that hedge was something I was really, really, really playing for this week to protect my portfolio. But unfortunately, I fumbled. And we gotta, for me personally, just gotta get over it and we gotta move on. So let's get a measuring stick here. All-time high to the FOMC low was minus 3%. And we are going beyond 3% now. So the market does look like it's definitely in correction. 4:50 p.m. into the weekend, this does not happen. We're continuing to flush. So obviously, it is giving us correct vibes, right? It looks like we are going to try to correct. I'm going to be cleaning up my 4-hour time frame as well. I think we're going to have to zoom out to the day time frame now and take a look at the bigger picture levels, because these structures are getting absolutely wrecked. So you know what? Let's just remove everything. And on the weekend, we're going to start fresh, right? It is giving me February vibes, though. Definitely. But anyways, it doesn't matter what I think. Just stay focused on the structure. A minus 5% dip, a minus 10% dip. It happens. And let's actually just draw a horizontal line here on minus 10%. Minus 10% is 61.35 on this ES December chart. 61.35 minus 10%. This is a massive inflection point from June. And if we look to all of the structure here, where is my brush? All of the structure here equals minus 10%. So are we going to get there? Yes or no? That is the number one question that we're going to ask ourselves next week. Anyways, guys, thank you so much for listening. Stay tuned for the Substack. It was a day trader's paradise this week. Unfortunately for me, I just was unable to give you guys a nice P&L today. It's all good though, but we're set for next time. And stay tuned for the weekend reports. I'm going to be sending out a lot of weekend analysis for the SPY charts, for the futures charts, for the Magnificent 7 charts. And this is where the true gunslingers of the game, this is where they're going to come out of hiding when price action is correcting 5%, 10%, even 20%. The real gunslingers of the markets are going to be shooting their shots. And that's exactly what we're going to be doing as well. So stay tuned for the new chart write-ups on this weekend. There's a lot of work to be done. It's not a time to be scared. It's not a time to be fearful. There's a lot of work to be done. Just like in April, how generational wealth was printed in April, maybe we can get another pullback that's similar to April, in which obviously I'm not going to be scared to be buying these big dips, especially with shares on great stocks like how we did with Tesla or even UNH. Thank you guys so much for tuning in. I will see you next time. And the Substack is going to be the home of Tradingwarz. So the Substack is completely free for everybody. I'm going to post it in the chat right now before I head out. The Substack is going to become the home for Tradingwarz. Everything that you need is in this Substack. Please read it. And SPY and futures will be added starting this weekend into Monday. Finally, guys, enjoy the weekend. Enjoy the weekend, right? It's not a time to be overly complacent or complaining, right? Like people on social media. Enjoy the weekend and come into Monday with a fresh mind. Come into Monday with a fresh chart. And come into Monday ready to play the game. Have a fantastic weekend. Tradingwarz.com if you need anything. Please avoid the scammers. And we will be back tomorrow. Tomorrow I will be sending out a ton of charts, analysis, and things to be prepared for if we do start to correct 5% and 10%, which looks like it could potentially be the case. 5%, 10%. Let's see. Just for fun, where's 20%? 20% is there. And then we have the Liberation Day high, 13% right there. John, Janice, Angel, Dr. D, thank you guys so much for tuning in, and I will see you next time.